So I don't want to bet against the growth story, especially if we have a more mixed, political control in Washington going forward, which of course we don't know yet. But it's if the blue wave is not quite a wave, but more of a tide with a divided government, then you could argue the growth story remains more intact. There's less regulatory risk, less perhaps pressure to do fewer share buybacks, and then those big growers with the free cash flow growth, that still remains a good story. But on the other hand, obviously we're in a pandemic. We've been in a very steep recession. The output gap has gone from 10% still to 3.5%. And as that output gap closes, obviously you want to bet on the cyclical side, which is typically what performs well coming out of a recession anyway. So I like to use sort of a barbell approach. I like the U.S. growth story still. And you look at like the Nifty 50 stocks, the top 50 stocks, they're only 5 points more expensive than the bottom 450. Whereas in 2000, during the NASDAQ bubble, they were twice as expensive, 40 times versus 19 times. So to me, there's still room for the growth story to continue. But with the reflation trade clearly underway, the dollar down, rates up, that bodes really well for non-U.S. equities, especially emerging markets. So that's sort of how I play the value/cyclical side of the fence.
Does the vaccine breakthrough change that narrative at all, though? I mean, we did see the dollar pop pretty substantially overnight, obviously rates moving higher. And prior to that move, we were speaking to guests about how this could be the EM breakout moment because of the lower rate environment and what's happening with the dollar. I mean, does this mark a substantial shift, or do you think this is a temporary knee-jerk reaction to the news?
No, I think the non-U.S. story is for real and has staying power. So I'm very bullish on non-U.S. stocks. I do think the dollar will continue to decline. I had been using kind of the 1940s playbook, which was, of course, a totally different time in history. But back then, the U.S. was entering World War II and had almost tripled its debt to GDP. And that debt increase was fully monetized or offset by the Fed. And my sense was that if there was a blue tide, we might see something similar, not to that degree, of course, and that would be a lower dollar, type of play. Now, if we do get a divided, government, and of course we don't know the answer to that until January when the 2 Georgia runoffs happen. But even if we get into a divided government mode, I think there'll still be some fiscal stimulus and offset by monetary policy.